Good mornings or good evening, everyone. Let me start by saying we stand at a gateway not just of rising charts or fleeting optimism, but of transformation. Imagine for a moment that you are on the shore, watching a tide rise. But this isn't just any tide, it's the tide of innovation, technology, capital, human ingenuity all converging, and we ask, is this the beginning of a bull run? There is a moment in every economic cycle when the world begins to question its foundations, when the structures we once trusted start to feel fragile, and what seemed unshakable begins to move. Today, that foundation is our dependence on a single currency. For decades, the global system has revolved around one monetary anchor, one standard of trust. But trust, like value, evolves, and what we are witnessing now is the quiet beginning of a monetary revolution that will reshape how we think about wealth, trade, and stability. When we look back through history, every dominant currency has had its era, each backed by power, influence, and confidence. Yet each, in time, has faced the same challenge: innovation. Innovation doesn't only disrupt industries, it disrupts money itself. Technology has democratized access to financial systems, and people are beginning to recognize that value can exist beyond a single issuer's control. This isn't speculation, it's structural. We are watching the global economy diversify, decentralize, and rewire its trust mechanisms in real time. Relying on one currency means concentrating risk in one place. It assumes that one government, one policy path, one set of economic priorities will always align with the world's needs. But the last decade has shown us how dynamic and unpredictable global economics can be. Shifts in interest rates, inflation, sanctions, and debt cycles ripple across borders faster than ever before. When one currency dominates, everyone else is exposed to its fluctuations. The result: fragility disguised as order. The future, however, belongs to systems that adapt. We are entering an age where diversification in currency is not just wise, it's inevitable. Digital assets, regional trade agreements, blockchain settlements, and cross-border payment innovations are collectively creating a new architecture of value. They are decentralizing power from institutions to individuals, from monopolies to networks. This transformation is not a rejection of the old world, it's an evolution beyond it. It's the realization that trust doesn't have to be concentrated. It can be distributed. We must also recognize that innovation is redefining the meaning of money itself. Currencies are no longer just mediums of exchange. They are expressions of belief in a system's stability and potential. When technology allows capital to move freely across borders, people naturally seek the most efficient, transparent, and resilient forms of value. That's why diversification isn't simply about holding different currencies, it's about embracing multiple systems of trust. In this new paradigm, innovation is the reserve asset. Think about it this way: if all your wealth depends on one monetary system, you are not diversified, you are exposed. The same principle that guides successful investing applies here. When we diversify across asset classes, sectors, and geographies, we reduce the probability of catastrophic loss. The same logic extends to currencies. A world powered by multiple forms of value, fiat, digital, commodity-backed, algorithmic, creates a more balanced, resilient ecosystem. It prevents any one failure from bringing the entire system down. Some will argue that the current monetary order is too entrenched to change, but history disagrees. Change rarely happens in one headline, it happens in 1,000 small signals. Trades settled differently, contracts priced in new ways, investors hedging differently, institutions exploring alternatives. Slowly, then suddenly, the world wakes up to a new equilibrium. What seems impossible at first becomes inevitable in hindsight. What's remarkable is that this shift is not being led by governments, it's being led by innovation. Entrepreneurs, developers, and forward-thinking investors are building the rails of a new financial system before the world even fully understands it needs one. They are designing money that moves at the speed of information, that operates without friction, that is borderless by design. That's what progress looks like, quietly replacing old inefficiencies with new possibilities. So, what should we do in this moment? We prepare, we study the signals, we stay open-minded. We don't cling to what was familiar simply because it was comfortable. True leadership, whether in markets or in ideas, requires anticipating change before it's priced in. It means seeing the potential in systems that others dismiss as experiments. The most transformative technologies always begin at the edges of acceptance. Before they redefine the center, we are entering a world where currency is no longer a singular anchor, but a spectrum of possibilities. And that's not something to fear, it's something to embrace. Because diversification is not weakness, it's resilience. It's how complex systems survive and evolve. As this transition unfolds, those who adapt will not just preserve value, they will multiply it. So, as we look ahead, let's not ask how long the old system will last. Let's ask what the next one will look like, and how we can be part of building it. The age of relying on one currency is behind us. The age of many forms of trust has begun. The question is no longer if this change will come. It's whether we'll recognize it early enough to lead it. There comes a time in every market cycle when numbers on a screen begin to feel detached from the world they're meant to represent. Prices rise and fall, confidence wavers, and investors start to wonder what is truly real. That question, what is real, has never been more important. Because in a world increasingly defined by data, derivatives, and digital abstractions, the foundation of lasting wealth is shifting back towards something tangible, something grounded, owning real things. When you strip away the noise of speculation, the endless chatter of short-term moves, what remains is value that endures through cycles. Real things, productive assets, infrastructure, land, energy, innovation, intellectual property, and even time. These are not illusions. They have intrinsic worth. They create, they serve, they generate. They cannot vanish with a server outage or evaporate with a policy shift. They represent the backbone of an economy capable of sustaining itself regardless of sentiment. The past few years have shown us the fragility of illusions. Trillions of dollars have flowed into abstractions, financialized bets, leverage upon leverage, promises of yield divorced from productivity. And yet, when the cycle turns, when liquidity tightens and fear replaces greed, what survives are the things that are real. Companies that build, technologies that solve, energy that powers, and assets that feed and shelter. Those are the constants in a changing system. Owning real things doesn't mean avoiding innovation. It means owning the innovation itself, the intellectual property behind a breakthrough battery technology, the patents driving a revolution in AI, the tangible assets that enable renewable power. These are the new, real things of the modern age. They are productive, they generate real-world impact, and they sit at the intersection of technology and necessity. The world's future value will not come from speculation on old systems, but from creation within new ones. We are watching a massive revaluation of what counts as wealth. For years, liquidity masked inefficiency. Easy money created the illusion that everything could go up forever, that paper wealth was permanent. But markets have a way of returning to fundamentals. They remind us that not all growth is sustainable, and not all assets are equal. The ones that endure have substance behind them. Cash flow, intellectual capital, real-world utility. They serve human needs, not just investor appetite. When you own real things, you anchor yourself to the economy's heartbeat. You align with progress, not perception. Think of the innovators building cleaner energy systems, the companies constructing networks that connect the unconnected, the farms and factories that sustain life. These are not just businesses, they are the foundation of civilization. They create value even when markets doubt them, and they reward those who see their potential before consensus catches up. There's also a deeper lesson in this. Real things remind us of time. Unlike speculative trades, they grow slowly, steadily, through cycles of creation and reinvestment. They require patience, something markets often lack but visionaries understand. The compounding effect of real productivity outlasts the volatility of sentiment. Those who own with conviction, who allow innovation to mature, who stay through uncertainty, are the ones who ultimately capture exponential returns. Consider this: the future economy will not reward those who chase momentum. It will reward those who build conviction in tangible transformation. Whether it's energy, robotics, genomics, or digital infrastructure, Owning the underlying assets that enable real change is the surest way to participate in tomorrow's growth. Inflation, geopolitical tension, monetary resets, all these variables test the strength of your holdings. And time and again, the assets rooted in reality prove resilient. Owning real things is also about sovereignty. When you own something tangible, whether it's intellectual property, productive land, or a technology platform, you hold control. You are not dependent on the shifting promises of others. You can endure policy shifts, rate changes, and even market dislocations because your value is self-contained. That kind of independence is rare, but it is the essence of true wealth. The next great wealth transfer will favor those who understand this shift. It's not just about buying commodities or holding land, it's about aligning with real-world progress. The innovators who are solving energy scarcity, health challenges, and mobility problems are creating the new storehouses of value. To own their output, their equity, their breakthroughs, is to participate in the future rather than speculate on it. So, as investors, as builders, as believers in progress, the question is simple: what do you actually own? Not on paper, not in a digital ledger, but in substance. What produces? What endures? What compounds? Those are the assets worth holding, because when the noise fades and markets correct, reality reasserts itself. In every era, the world rediscover this truth that prosperity is not printed, it is built, it is engineered, mind-coded, cultivated, and imagined into being. Real wealth comes from creating and owning things that make the world function better tomorrow than it does today. That's not a retreat from innovation, it's the ultimate expression of it. So own what is real. Own what serves, what lasts, what grows. In times of uncertainty, reality becomes the rarest asset of all, and those who understand that, who invest not in illusions but in foundations, will find themselves not merely surviving the next cycle, but defining it. There is a quiet strength in being prepared for uncertainty. Markets move in cycles, innovation reshapes industries, and sometimes the most confident trends can reverse in a heartbeat. In that kind of world, protection isn't about hiding from risk, it's about designing your strategy to absorb it. Diversification is not a defensive act. It is an intelligent acknowledgement that the future will not unfold in a straight line. It is the art of staying exposed to progress while remaining resilient to surprise. Too often, investors think of diversification as dilution. They imagine it means spreading themselves too thin, missing out on the big wins. But in reality, diversification is about endurance. It is what allows you to participate in long-term growth without being broken by short-term shocks. The most successful innovators, the most resilient investors, understand this truth. Concentration builds wealth, but diversification preserves it. And preservation is what enables compounding over time. Think of diversification as an ecosystem. In nature, systems survive not because every species thrives at once, but because each plays a role in maintaining balance. When one component falters, another rises. The same holds true for your portfolio, your business, your strategy. When one idea is temporarily out of favor, another can carry the weight. Diversity doesn't weaken the system. It strengthens its ability to adapt. In the world of innovation, diversification also means embracing multiple frontiers of progress. Artificial intelligence, robotics, genomic sequencing, renewable energy, blockchain, all are advancing at exponential rates, but not all at the same pace. Some will mature faster, some will stumble, some will leap unexpectedly ahead. By spreading exposure across transformative technologies and across regions, we participate in the larger theme of progress rather than betting on one narrow outcome. The future is too dynamic to assume that a single path will dominate. The danger of overconfidence is that it blinds us to unseen risks. Every bull market carries within it the seeds of its own correction. Every breakthrough brings new challenges. Diversification allows you to withstand those moments without losing conviction. It's not a lack of faith in innovation. It's faith expressed through prudence. You can believe in the exponential power of disruption and still respect the unpredictability of adoption curves. Even within innovation, diversification matters. History has shown that the greatest technologies often take longer to monetize than expected. Markets misprice them, timelines shift, regulation intervenes. Those who bet exclusively on one vision risk being right too early, which, in markets, can look indistinguishable from being wrong. But those who diversify within the innovation spectrum keep themselves positioned to benefit when reality catches up with potential. They give themselves the time that breakthroughs often need. Diversification is also psychological protection. It shields you from the paralysis that comes when one position falters. When you know that your exposure is balanced across a range of ideas, you are less likely to react emotionally. You can stay focused on fundamentals, research, and long-term trajectories rather than short-term noise. Emotional resilience is just as vital as financial resilience, and diversification is what grants both. It's important to understand that diversification is not about owning everything. It's about owning what matters across multiple dimensions. It's aligning yourself with a variety of drivers, technological, geographic, thematic, that can thrive in different macro conditions. In a world of accelerating change, the most powerful form of diversification is intellectual, being open to the unexpected, ready to learn, and willing to pivot when the data demands it. The global economy today is more interconnected than ever, and that interconnection brings both opportunity and fragility. A policy shift in one region can ripple through global markets overnight. Supply chains can freeze, currencies can swing, technologies can leapfrog each other. No single hedge, no single position can protect you from that complexity. But a thoughtfully diversified portfolio, one grounded in real assets, innovation, and long-term growth themes, creates a buffer against the unknown. It allows you to remain invested, confident, and patient through volatility. Diversification is not a surrender to uncertainty. It's how you turn uncertainty into opportunity. By holding multiple paths to success, you increase your chances of participating in the breakthroughs that define the next decade. You protect your capital not by avoiding risk, but by spreading it across the forces of progress. Because innovation itself is unpredictable. The timeline of adoption is never linear, but the direction of change, the arc of advancement, is clear. Diversification keeps you exposed to that arc without being dependent on any one point along it. So when the world feels volatile, when headlines amplify fear, remember protection is not retreat, it's strategy. Diversification is how you remain brave in the face of uncertainty, how you stay invested when others panic, how you turn volatility into an ally instead of an enemy. The future will always surprise us, but those who understand that no single idea, company, or currency defines the entire opportunity set, those who embrace diversity of thought and exposure, will endure and thrive, because in the long run, progress rewards participation, and diversification ensures that, no matter how the path twists, you'll still be walking toward the future. Every market cycle begins with excitement and ends with exhaustion. Yet between those two emotions lies the space where vision, patience, and conviction matter most. Thinking in long-term cycles is not just an investment philosophy, it's a way of seeing time differently. It's understanding that value is not created in the noise of daily movements, but in the quiet compounding of innovation, productivity, and belief over years, even decades. Short-term thinking is easy. It gives the illusion of control. The constant stream of data, the flashing charts, the endless commentary, all of it feeds the desire for immediacy. But markets don't reward impatience, they reward perspective. The most transformative ideas rarely move in straight lines. They rise, stumble, consolidate, and then accelerate again when the world finally recognizes what they've become. The investors who think in long-term cycles position themselves before that recognition, not after. Every era of progress has its own rhythm. Technology, like nature, moves in waves, periods of rapid disruption followed by recalibration. The internet had its boom and crash, but those who saw beyond the volatility captured a generation of value creation. Electric vehicles faced decades of skepticism before becoming inevitable. Artificial intelligence is undergoing that same evolution now, doubted, hyped, misunderstood, yet steadily advancing beneath the noise. To think long-term is to understand that innovation always overshoots in the short term and underdelivers on early expectations, only to exceed them later in ways few anticipate. Long-term cycles are not just economic, they're psychological. Human behavior moves through phases of euphoria, fear, doubt, and rediscovery. Markets mirror that psychology, exaggerating both hope and despair. But underneath it all, progress continues. Companies adapt, technologies evolve, productivity improves. When sentiment collapses, innovation doesn't stop, it simply gets mispriced. Those who understand the rhythm see opportunity where others see risk. Patience is the most underrated form of conviction. In times of uncertainty, holding your belief in innovation feels uncomfortable, even contrarian. But discomfort often signals proximity to long-term value. The greatest opportunities emerge when markets lose faith in the very trends that are quietly maturing beneath the surface. History has shown this again and again. Cycles correct excess, but they don't end progress. The challenge is distinguishing between temporary noise and structural change. To think long-term is to build through the cycle, not react to it. It means allocating capital, energy, and attention toward what the world will need 5 or 10 years from now, not what is trending today. The innovators who change the world don't chase sentiment, they endure it. They use down cycles to build stronger, leaner, and more efficient systems. They understand that every winter in the market is followed by a spring of renewal. The same applies to investors who align themselves with innovation rather than speculation. The world is entering an era of massive transformation. Energy, AI, robotics, genomics, space, and digital infrastructure are converging. These shifts won't play out in months or even a single business cycle. They will unfold over decades. Some phases will test conviction, others will reward it. The key is to remain anchored in research, data, and understanding rather than headlines. The market may price assets based on quarterly results, but real value compounds through years of creation and adoption. Short-term cycles are noisy and emotional, but long-term cycles are structural and exponential. Compounding takes time to reveal its power. Every great breakthrough looks modest in its early years and inevitable in hindsight. The difference between those who capture it and those who miss it is time horizon. A long-term thinker sees the pattern forming long before the world calls it a trend. They understand that the path of progress is uneven but unstoppable. Even when the cycle turns downward, there is meaning in patience. Downturns cleanse inefficiency, reward genuine innovation, and reset valuations to levels where new growth can begin. Those moments are not the end of a story, but the beginning of the next chapter. Thinking long-term means viewing every correction not as a failure but as an invitation to re-examine conviction, strengthen strategy, and prepare for the rebound that history tells us always follows. Long-term cycles remind us that progress is cumulative. Every invention builds on what came before. Every disruption seeds the next generation of innovation. What looks like decline often hides reinvention. That's why optimism is not naive, it's logical. The more we innovate, the more resilient the global economy becomes. Patience allows that compounding to unfold. So, when volatility rises, when the noise gets loud, step back, zoom out. Ask not what the market is doing this week, but where the world is heading this decade. Because cycles come and go, but the direction of progress remains upward. Those who think in years instead of quarters, in generations instead of cycles, will not just survive, they will lead. Thinking long-term isn't about ignoring the present, it's about putting it in context. It's seeing today's turbulence as a single frame in a much larger film, one still being written by innovation, human creativity, and the unstoppable drive to improve. The real question isn't where the market is headed tomorrow. The real question is, what future are you preparing for? Those who think long-term already know the answer. They're building it one cycle at a time.